Welcome to Consistent Trader. In the series of stock market learning, today we are going to learn a intraday trading strategy for stocks. Come, let's get into the video. So, this is a high compression trading strategy. This is a strategy in which when the stocks get compressed state, the next day it may have a breakout in the either sides. So we are going to use this principle to capture some points in the stocks. The time frame which you are going to use is 15 minutes time frame, and the stock selection condition is that if we are going to trade for tomorrow, we have to check the stock on the previous day itself. On the previous day, we have to draw high and low of the first 15 minutes candle. The entire day, no 15 minutes candle should close above the high or low of the first 15 minutes candle. If the stock is like that, then we can select the stock, add it to our watch list. I'll explain you in the chart so that it will be easily understandable. For example, let us consider Axis Bank. So in case if 3rd was our trading day, we need to check the previous day. Previous day is 2nd. On the 2nd, we have to select 15 minutes time frame and we have to mark the high and low of the first 15 minutes candle on the previous day which we are going to trade. So this is the first 15 minutes candle on 2nd September, and let me mark the high. This is the high, this is the low. So we have to check whether any candle is closed above or below the first 15 minutes candle. If the candle has closed above the first 15 minutes candle or below, then we should not take that stock, because we have to consider an extreme compression stage in which the stock does not breaks the opening range high and low. So our condition is satisfied. On the next day, what we have to do is, on the next day, so wait for first 15 minutes candle to form. Then mark the high and low of the first 15 minutes candle on the day which you are gonna do trade. Let me mark it in yellow so that you can easily understand. So this is the high and this is the low. When we are gonna enter, we are gonna enter when the candle breaks above the first 15 minutes candle high or below the first 15 minutes candle low. If the candle broke above the first 15 minutes candle, then we have to go for a buy trade. If the candle breaks below the first 15 minutes candle, then we are going to go for a sell trade. Here the candle got broke on the low side, so we are going to sell at this candle. We have to place the sell order at the end of this candle, and our stop loss will be the high of the candle which we are entering. This will be our stop loss. We can also keep the stop loss as the high of the 15 minutes candle. If it's too large, better take the candle's high which you are gonna enter. This is for a sell setup. So let us check. This is our entry and our stop loss is 0.46. We can keep 1 or 2 times the stop loss as a profit. Here it have achieved 2 times. So the risk reward is 1:1 or 1:2. Based on your risk appetite, you can keep the risk reward as per your type. Here I am considering a 1:2 risk reward. So the risk I am taking is 3.77 rupees and the reward I got is 7 points. So 1:2 satisfied, and this was a profitable trade. In case if the candle broke above this line, then we would have gone for a buy, and the stop loss will be the low of the entry candle or the low of the first 15 minutes candle. If the low of the first 15 minutes candle is too large, then you can keep the low of the entry candle as a stop loss. If the low of the first 15 minutes candle is nearer to the entry candle, then you can keep the stop loss as the first 15 minutes candles low. This is the highly compression strategy. I'll show you another example. Now we'll consider another example, which is Kodak Bank. In this, our trading day was 2nd. So on the previous day, we need to mark the high and low of first 15 minutes candle. So this is the high and this is the low, and we need to check that no other candle should be closed above or below the high and low accordingly. So our first condition is satisfied. Now what we are going to do is we are going to add this to our watch list and wait for the next day, which is 2nd. In the next day, what we are going to do is we have to wait till the first 15-minute candle is formed, and then we have to mark the high and low of the first 15 minutes candle, and we have to check if there is a breakout on the top or the bottom side. Here there is a breakout on the top, so we are going for the buy side. So our entry will be around this point, and the stop loss is the low of the candle which we are going to enter. So our stop loss will be around here 175 1752.91. This will be our stop loss. This will be our entry. Let us check. It's a 1:1 or 1:2. So the risk we are taking is around 16 rupees, and the reward we would have got is around 17 rupees at the end of the day. Since it's a intraday, we should close the trade at the end of the day. We should not carry forward it. So here 1:1 risk reward has been achieved. So this is a simple strategy you can make use of. Try this on the stocks. Before that, I will give you a scanner which scans the stocks that are trading in between the first 15 minutes high and low. That can be done with the help of the charting scanner. So this is the charting scanner. I will leave a link of this scanner in the description section. You can make use of it. All you have to do is click run scan at the end of the trading day. You will get a list of stocks. You have to add these stocks to your watch list. Check if the high and low does not broken on both the sides. Then better use this on the future segment. Hope you all understand the video. If you have any doubt, please leave the comment. We will clarify that to you. Please support us, like our channel, subscribe to our channel, and share it with your friends. Thank you. Thank you so much for watching. Bye.